Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, we're putting the spotlight on Apple, ticker symbol Apple, a stock that's been making headlines and significant moves. It's August 7th, 2025, and we're seeing some compelling developments shaping AAPL's trajectory. Let's start by looking at the broader daily chart to get a sense of Apple's long-term performance. Recent news has been a major catalyst for Apple's strong performance. Just yesterday, President Trump and Apple CEO Tim Cook touted a significant new investment by Apple within the U.S., which could help the company avoid potential tariffs and boost domestic production. This positive sentiment is reinforced by Bank of America, which recently raised its price target for Apple to $250 from $240, reflecting growing analyst confidence. Furthermore, Apple's strong third-quarter results, reported just last week, showing a 10% year-over-year revenue increase and a 12% rise in diluted earnings per share, certainly provide a robust fundamental underpinning. These factors, combined with Apple being a core member of the Magnificent Seven, are contributing to the stock's impressive surge, leading the S&P 500 and Nasdaq higher. According to the latest real-time data from news sources, Apple is currently trading around $213.25, indicating that the bullish momentum is very much alive today. Now, let's turn our attention to the daily chart to see how these news events translate into price action. Over the past year, Apple has been in a clear uptrend, moving from the $170 range in early 2024 to its current levels. We can identify historical support zones around $170 to $180, which held strong during several pullbacks, demonstrating investor confidence at these levels. Another key support area emerged around $200 to $205 earlier this year, which acted as a springboard for recent rallies. If we narrow our focus to the past few months, we can clearly see the impact of this recent positive news. After a period of consolidation and a slight dip in July, finding support near the $200 mark, Apple staged a remarkable turnaround. Notice the candle on August 5th, with a significant 5.11% gain on high volume, followed by another impressive 3.71% jump on August 6th, pushing the price to $213.25. These two strong green candles, accompanied by substantial trading volume, confirm a powerful bullish reversal directly tied to the news of the U.S. investment and renewed analyst interest. The $213.25 level, previously a minor resistance point, has now been firmly established as a new immediate support or baseline. Even with the latest daily candle showing a slight pullback from its open, the overall sentiment and higher intraday trading from news suggest this level is being defended. This price action signals that buyers are aggressively stepping in, absorbing any selling pressure and driving the stock higher. This breakout from the prior range above $205 is a very encouraging sign for continued upward momentum. To truly appreciate the strength of this rally, let's zoom in on the 15-minute chart for August 6th, the day of the major surge. As the market opened on August 6th, starting around $205.63, you can see consistent buying pressure driving the price steadily upwards throughout the day. Each 15-minute candle shows higher lows and higher highs, a classic pattern of a strong, sustained uptrend. Observe the spikes in volume around the market open and during key breakouts, confirming institutional and retail participation. There were brief periods of consolidation, like around the $210 mark midday, but these were quickly followed by renewed buying, showcasing the underlying strength. The stock pushed to an intraday high of $215.38 before closing strong at $213.25, indicating that the momentum was maintained right into the close. For traders, identifying these microtrends on shorter timeframes allows for precise entry points on minor pullbacks within a larger uptrend. The continuous high volume on positive candles during this period provides a strong confirmation of the bullish sentiment. Returning to our daily chart, let's consider the short-term and long-term outlook for Apple. Reasons to be bullish are plentiful. the significant U.S. investment reducing tariff concerns, the direct analyst upgrade to $250, solid Q3 earnings, and its position in the powerful, Magnificent Seven group. The recent breakout above $210 with strong volume is a clear technical signal of strength, suggesting further upside is likely. In the short term, if the momentum continues, Apple could retest the previous resistance zone around $230 to $235 with high likelihood, perhaps even pushing towards the $250 analyst target. Longer term, the analyst high forecast of $300 remains a plausible target if Apple maintains its innovation pipeline and market dominance. However, caution is always warranted. Reasons to be bearish, or at least wary, include the potential for global economic slowdowns impacting consumer spending on tech, unexpected policy shifts regarding international trade, or any signs that the touted U.S. investment isn't as impactful as expected, could also lead to pullbacks. There's also the possibility of profit-taking after such a rapid ascent, which could see the stock retesting recent support levels. For traders, key price levels to watch are the immediate support around $213.25, which needs to hold to confirm continued strength. Below that, the $200 to $205 zone acts as a stronger psychological and technical support. On the upside, the $230 to $235 area is the next major resistance to overcome. Unbiased predictions suggest a high likelihood, perhaps 70 to 80%, that Apple will test the $230 to $235 resistance in the coming weeks, especially if positive news continues to flow. The probability of reaching $250 within the next 6 to 12 months seems moderate, around 50 to 60%, contingent on sustained market strength and no major negative macro developments. A sharp reversal back to $200 to $205 is less likely, maybe 20 to 30%, unless a significant negative catalyst emerges or the broader market takes a downturn. Keep an eye on any further announcements regarding the U.S. investment, the performance of the broader tech sector, and the upcoming quarterly earnings reports for additional clues. Remember to always trade with a plan, manage your risk, and stay informed. That's all for today's Explain the Charts on Apple. If you found this analysis helpful, please like, share, and subscribe for more in-depth market insights. Thanks for watching and happy trading!